All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin in the crypto markets. Welcome in, everybody. So Bitcoin is dumping. We are getting that aggressive dump that we thought we were going to get, and this could get much worse, guys. We do see some pretty bearish money flow still here at support. But if you remember yesterday's live stream, we covered this, and let me take a second. Welcome in, everybody. Happy Friday to you all. I hope you guys are positioning yourselves properly, using proper risk management in these volatile times. But Yeshwant, much love to you. Ryan Hinson, yes, we do definitely have some more action today. And welcome in, Michael Mitzal. Good evening to you. Dad87, thank you for the kind comments and the support, as always. Darksby19, Sergio, welcome in. Crypto Wanderer, smash the likes on the way. And yes, guys, please hit the like button if you get any sort of insight into the market from this live stream. And Decrypto, good afternoon to you as well, man. Thank you for being here. So guys, and Andrew, welcome in. We covered yesterday, because this 76K to 67.3K dump was more likely to be an impulsive move to the downside. We were looking for a three-wave corrective move overall to make a lower high before potentially seeing the big dump come into the downside, our wave 3 to the downside. Now, this is on the daily time frame, so we're looking for a big dump on the daily time frame to come in to take out our 60K lows. This is what we're looking for. In my opinion, this is the highest probability scenario that does play out, is we get that final dump to the downside, taking out the 60K lows. 57, 58K, and then 54K are pretty key support levels below for me. But if inside of this third wave, we are expecting a 5-wave move within the primary count. So this red count is the primary count of the Elliot wave move to the downside. But within the third wave, we're looking for a smaller 5-wave impulse. And what I'm looking for really primarily is a potential bounce from this area, although right now it does not look good, guys. It does not look good. It does not look like we are going to bounce right now. We're pretty much failing the swing failure pattern. It is chopping around. We could still see a low time frame failed auction in this area, kind of where you kind of pierce above it for a few times, and then you get the rise up, very similar to what we saw on Wednesday. If I zoom in onto the 1-hour chart on Wednesday, when we were taking out these highs, let me just hide this Elliott wave count real quick. When we were taking out the Monday highs on Wednesday, you can see we had multiple wicks on the hourly chart above those highs, 1, 2, 3 hours. So on the low time frame, it looks like the swing failure pattern is failing. It looks like, oh gosh, we're chopping a bunch up through it. We're really not getting that swing failure pattern. And then it does end up playing out on the higher time frames. Well, if we look at what's happening right now on the lows, that 65,618 low on Coinbase, we did front run it earlier today, and that was a very bad sign. We front ran it just barely. We saw a move up pretty much to back test the value area low. We also saw another back test the value area low rejected. As soon as we back tested the value area low right here, we should have expected to take out these lows, and we did finally. So we've been just chopping, and right now I'm watching a low time frame descending channel that is forming. So I pulled it just from the first two highs. Now we're starting to see a little bit of selling exhaustion come in. So when you start to see this choppy overlap like this, and you are seeing some bull divs on the chart, that is a good sign. Money flows curving up, crossing into the green on Nami, and it looks like it's trying to bottom out on Market Cipher B. But here's the thing, guys. We're barely holding those lows, And what is concerning to me right now is if we go onto our order flow charts and we look at this chop that is occurring right now that could look like selling exhaustion. But let's see what is happening here on the order flow. First off, we saw a lot of fresh dumps from the consolidation we saw towards the end of yesterday's stream. This was the consolidation we saw towards the end of yesterday's stream. You can see a lot of fresh short positions came in overnight and early this morning. A massive amount of shorts are coming in. Bears are in control right now, which we expected this. We expected the bears to be in control. We expected this dump to the downside. This is nothing we weren't expecting on this channel. But as we're chopping within this descending channel, which could be seen as selling exhaustion, you can see that we do have a lot of longs coming in. This is a pretty key support. So understandably, we see a lot of longs coming in. But right now, we are making lower highs on the price action. We are making higher highs. If we go from this first high right up here, we are making higher highs on the CBD, and it's on an increase, actually a massive increase in open interest. So we are seeing a lot of longs coming in here, but those longs are not successfully able to push the price up and break market structure. So this is classic bearish absorption we are seeing at the lows. And if this fails, if the bulls cannot hold on here and this bearish absorption plays out, we're going to see this. Boom. Dumpage, big liquidations. All of these longs coming in here will get squeezed out. We're going to see a aggressive move to the downside, breaking the value area low aggressively to the downside. And our third wave that we have been seeing for the past 2 days will continue to the downside aggressively. Probably coming down and sweeping out some of this liquidity in here before seeing a real bounce. Overall, guys, I am expecting the dump to continue. Now, what I would like to see, this is what I would prefer to see, is to see this all from the highs from Wednesday being a wave one to the downside. Reject value area high, rotate down to value area low. If we can see some support hold here, we should be expecting a 3-wave move up towards our golden pocket, our POC, that general area, for our wave 2 correction. Then we get the wave 3, the subcount wave 3 within the bigger wave 3. Then the 4, then the 5. In the 5-wave impulse, the subcount of this third wave, of the larger daily third wave, that red count that I showed you here, I expect it to end below the 60K lows. Our 1.618 Fibonacci extinction is at 59,200-ish. And that is where we could end this dump. But remember, we're looking for ebbs and flows within this dump. 1, 2, 3, 4, 5, something like that. We're looking for ebbs and flows within this dump. And this dump down to 60K could take another 2 weeks to play out, another week or 2 weeks to play out. So we have to be, overall, the mindset for me is bearish. We are expecting to come down and take out these lows. But you will see bounces and long opportunities along the way. And right now is one of those long opportunities that I'm trying to get into. I have not longed yet, guys. I know that we've seen the pierce below the level and the rise above the level. With the volatility of the dump that's occurring right now, I am waiting for a break in market structure. I am playing this more conservatively because you do not want to counter trend trade an aggressive third wave to the downside. That is when you can get wrecked. And so for me, in order to see maybe this is the end of the 5-wave, and by the way, if we go onto the 1-hour chart, that's the 2-hour, let's go to the 1-hour. We were looking from yesterday's highs at the count. 1, 2, this now looks like it was our 3, our 4, and then we're in a 5, and your 5 is extending pretty far. But this could be the end of the wave 1, a 5-wave leg to the downside. We want to see that move up in a wave 2, and this is what we really want to short. If you're not short already, you know, from somewhere in here. I mean, if you're short from somewhere in there and we do start to bounce here, compound, take some profit at support, compound back here. Up here, I should say. So that's kind of what I'm looking at for the next week or so, next few weeks with Bitcoin. But the dump is pretty aggressive right now. If we look at the money flow on the 4-hour, still aggressively leaving on Market Cipher B. And Nami keeps having these sharp moves up, followed by more downside. So, and I don't really like the way the 4-hour looks immediately within this corrective channel that we're seeing right now. We're not really seeing bear divs. They're bull divs, excuse me. We're not really seeing bull divs there. And also on the 4-hour, we're not seeing bull divs on Nami either. Neither on Market Cipher B, no bull divs. And if this was going to be a nice bounce here, I would expect to see maybe some 4-hour bear div, bull divs, excuse me, but at least 2-hour, 1-hour bull divs, right? 1 hour, no bull divs. Let's go to the 4-hour. Now the 4-hour, you do have potential for bull divs between last Sunday's weekend low and the lows that we're coming into right now, we do have actually Market Cipher right now, it's now been invalidated. They are equal lows as we speak. And even on Nami, they are equal lows as we speak. Money flow, first of all, even if we did have bull divs, one drive of bull divs will always be overpowered by bearish money flow. Look how bearish the money flow looks on the 4 hour. Look at how bearish the money flow looks on the 4 hour on Market Cipher. I mean, it just, to me, guys, this is pretty aggressive to look for a long right now. I am not seeing the proper confirmation. I would love to take a long here. I am trying to take a long here. I've been sitting here all day. I was going to go live earlier, but I've been waiting and waiting and waiting for some sort of sign. Now, on the 12-minute, the 15-minute, yes, we are seeing some nice bull divs form. But we have to pay attention to those intermediate timeframes, because those intermediate timeframes are going to overpower. If we were going to get a good, strong, long signal from here, we would want to see some intermediate timeframe bull divs, and we would want to see the low timeframe bull divs, and we would want to see some money flow bull divs as well. Now, Market Cipher is slightly showing some money flow bull divs. Nami is not. And I like the setup. I've told you guys my prime setup that I look for is when Nami has money flow bull divs, multiple drives of momentum bull divs, and Market Cipher has momentum bull divs with money flow bottoming out and at least coming to the starting to come to the upside. So I don't see that prime setup here. And that prime setup plays out a majority of the time. Now, what am I looking for in order to get into the long position? Because I am being conservative here. So if we look at this channel here, if we can start first, a couple things. Let me hide this green box of support real quick to get that out of the way. A couple things we would be looking for. A break in market structure, right? So we need to take out these lower highs on the rejection of the value area high. That is going to be coming in right around 66,233. If we can break those highs, we would also pretty much be breaking out of the channel. And then say we come back for a retrace. That is where I'll look to long on the retrace there. And we could see a nice move to the upside. We do have some nice fair value gaps in here. And we could push up to about the golden pocket. So if we're looking for a wave 2 retracement to come in over the next few days, let's pull our Fibonacci retracement tool from the highs of Wednesday to our current lows that we're creating right now. Your golden pocket is in kind of a nice area because you can see this order block in here as well. This little 2-hour order block, which was partially filled, but not all the way filled. So you do have an order block around your golden pocket. But honestly, guys, the POC is a volume level of resistance now. And your point of control is probably going to be, if we do hold here, maybe chop a little bit lower, hold here, and we make a rise up, I'm going to really be watching that POC for the rejection. And on Coinbase, the POC is going to be right around 68,900 to like 69K. So 69K could be a prime short to bring down to 59K. I mean, $10,000 short right there. So that's what I'm looking at. We are starting to slow down here. We are starting to see that selling exhaustion. The concerning thing that we're seeing right now with this selling exhaustion on this chart is, if we look at the order flow, the bearish absorption that we are seeing on the chart. And that bearish absorption to me is quite scary. And means that we could continue, because you can see, especially the last, like I'd say 2 or 3 hours from the initial lows early this morning, we are seeing a lot of longs overall starting to step in here. And look at a high amount of long positions stepping in, but they are not moving the price up. They are not able to break market structure. This is a sign that whales are absorbing these long positions, looking for fuel to the downside. Is there a chance the bulls can win? Yes, there is. The bulls can keep continuing to long. Enough pressure builds up here where we do get that break to the upside. We get that break in market structure and we get that move to the upside. And if we are able to break market structure, get that move to the upside, if the bulls can kind of take over temporarily, we see a lot of shorts also that shorted in this move down kind of overnight for me. It was overnight for me. This move down, there's a lot of fresh short positions that can get squeezed. So if we can break market structure and start to squeeze up here, you could squeeze up to that $69,000 area pretty dang quickly. That is what we want to see. It's a fight right now. It's a real fight, Bears versus the Bulls. And I have to say the Bears are winning. The Bears are in control right now. But that doesn't mean that it can't change. One thing that we have going against us, if you're a bull, we're going into the weekend. Lower amount of volume, lower participation in the markets. And that is generally when you start to range. So the third scenario, because we are going into the weekend, because it is towards the end of the week, is we start to chop in here, go sideways for the weekend, and maybe build up some sort of mini accumulation in here. You know, maybe just see a breakout like this to come up, reject from VWAP, come back down, maybe take the low one more time, and then you see that kind of accumulation that develops in here over the weekend. And then we would hope to make a move up. Now, another key thing to pay attention to. Let me just go ahead and get rid of some of this here real quick. Another really key thing to pay attention to is going to be your value area low of your 6.5, 7 week long range. If we start to close the daily candle today below the value area low, that is a major sign of weakness. Knowing that we rejected from the value area high twice last week, at beginning of this week, at the beginning of this week, rejected twice from value area high. If we close the week below the value area low, man, bears are in control, and this third wave could get very aggressive to the downside. If you are looking for longs, that is acceptable, especially at support levels that we're at right now. But you have to be careful here, guys. You have to be careful. We are breaking our pitchfork to the downside, and this pitchfork has kind of been our bullish structure for the last 6 weeks. We're breaking it to the downside. If we close our daily candle below the pitchfork, that is a sign that this entire structure trend might be breaking, and that is a bearish sign. Now, if we look at our bearish pitchfork, I mean, this could be wave 1, wave 2, wave 3, 4, and then 5 coming down to 59.9. It could get very bad in here very quickly, guys. And in the scary part is if we don't bounce where we're at now, we could see this get even worse, you know, because it doesn't have to end at the 1.618. Your third wave doesn't have to end there. It's a common target for it to end, but we've seen third waves extend to the 2-to-1 Fibonacci extension. We've seen them extend to the 2.618, and maybe this third wave is going to bring us down to 58K, and then we're going to see a bounce in a 4, and then our 5 is going to bring us to 54. That's another possibility, is that this could dump us aggressively all the way down to 58. All right, let me check the chat here, see what all you guys are saying. Liam, good evening to you, man. Welcome in, and thank you for being here. Thank you for commenting. Full Port, good evening to you. TXRX, Tony CC, welcome in, everybody. Also possible it breaks below 65.5. That becomes resistance. Yeah, and the dump down continues. Exactly. Actually, what we need to look for, TXRX, is the value area low. Even on the low time frames, we're breaking the value area low, and we've already back tested it and rejected from it right here earlier today. And even somewhat here, we tried to break back in the range and we couldn't. So the value area low could act as resistance. If we break down to 65K, come back up, reject from that value area low, you expect to take out this local low. So we have, man, we don't have much that is going to hold us up if we start to close, you know, this liquidity in here. We do have a small liquidity trail. You guys can see these two lower lows in here. So there's some liquidity trail there, but the big liquidity is here and here, right? Coming down to $63,000 and coming down to 62.5. All right. Ryzen JI69, welcome in, man. TNB Willa, Patrick Schooner, not quicker. Thank you guys so much. Glasshopper77, Nightwalker. Thank you guys for coming in here, being part of the stream. And R Pink, much love to you as always, bro. Thank you so much for being here. Thank you for modding. Thank you for the great job you do modding. And Little Rich 69, Creedon Egg, welcome in. Please chart ETH. Yes, we will look at ETH as well. And Jesus Save 77, God bless you as well. So guys, the thing is, I am looking for longs right now. I am looking for longs, but I just don't see it. Let's see if we can't. Now, a bullish sign for today, at least a temporarily bullish sign for today, is if we can close the daily candle back at or above the value area low, that would be pretty nice. That means that we might see that bounce over next week, that wave 2 bounce. And guys, now that we have our bearish pitchfork on, what were we looking at for the past few weeks? We were rejecting from the upper band or the upper limit of that pitchfork band. And if we do see a wave 2 from here, 3-wave corrective move, what did I say about the POC? POC is in confluence with the lower limit of that band. And that could be where our wave 2 rejects. Once again, 68.9, 69K. So I will be looking around 69K for shorts. Could we come up a little bit higher to the golden pocket, which would be around 70K? Or let's pull that golden pocket. Yeah, about 69.5 to 69.750. Yeah, we could. We might keep dumping just a little bit lower here, and that might make our golden pocket align more with the POC. But we're gonna have to see. I want to really pay attention here on the low time frames. We might be able to get a long position here if we can start to break out of this small descending channel. And wait, what the heck? That's not the right descending channel. This descending channel here. And we're struggling with the midline. You guys can see right now, if I come in here, rejection, rejection. We're trying to finally have our first 12-minute candle above it. Let's see if we can't get some sort of break in market structure. Let's see if we can't get some sort of sign of strength coming in here. I really would like to see that. Now, yes, we did SFP the lows. At least if you look like on the, the 2-hour chart. And let me throw those lows back on there. Let's see, where was that? This guy here. Not really even a 2-hour SFP. Let's look at the 4-hour. Yeah, it's like a 4-hour SFP right now. But it's just not looking the strongest here, guys. I just don't like what I'm seeing. If you're in already, great. I would hold it open. But if you do start to come up here and reject from the top of the channel along with that value area low, I really would be cautious on protecting your position or maybe taking some profit and getting out there, because if we do see this value area low at the top of the channel and your trend continues, you are expected to make new lows. Okay, Golden Liquidations, welcome. Thank you so much for the kind comment, man. I appreciate that, guys. I appreciate all your support. I appreciate all your kind comments in here. I'm just doing my best to kind of help navigate you guys through as well as I'm trying to navigate myself through this market. But I do have to say, guys, a lot of channels were getting really, really bullish on Monday and Wednesday. And we were looking for a 3-wave corrective move. Now, I will admit, I thought the 3-wave move was going to bring us up to the golden pocket. I did not think we were going to get a double top here. I thought we were going to get more of a WXY that brought us up to the golden pocket. But we did say the minimum target was just to take out your A wave high or your W wave high, right? Remember, we had this WXY on the chart. I was talking about this being the most probable scenario before dumping. And if you go watch yet a Monday's video, if you Monday's live stream, if you watch Tuesday's video, if you watch Wednesday's video, I talked about all of that. And I've been consistent on this should be a 3-wave corrective move to make a lower high. I also told you guys that because we already saw one fake out, let me just go ahead and hide this real quick. It looks like we're trying to get a push here, guys. This is somewhat good. We will be paying attention to this. But remember last time within this range, let me just go to the 2-hour chart. Within this 6-week long range, the last time we rejected from the Coinbase anchored VWAP and this move down looked impulsive, and it did. Wave 1, wave 2, wave 3, of running flat in a 4, and then a 5. So we did have a 5-wave move, and I was looking for a lower high before putting in that big 3rd wave dump. We didn't end up getting that. But because we had a fake out after an impulse down, we had a fake out and made new highs. I was saying this time, because we're seeing an impulse down, it's far more likely that it's not going to be a fake out, that it's going to be the real deal this time, that we should be looking for the 3-wave zigzag corrective move before dumpage. And I have to say, it's, it's already taken out those weekend lows. So that is a good sign. We're already below those weekend lows. We did come down to our support level, the big support level. Now, yesterday during the end of the live stream, I did say that 67,850, that's where that daily and that 886 Fibonacci, it happened pretty late at night for me. I was sleeping, but we busted straight through it. No reaction. And there was no reaction because we got a little bit of a front run of it. We got this front run. We got 2 green candles. By the way, in yesterday's video, in yesterday's live stream, remember, right in here, we got that little scam pump during the stream. We came up to the 382 Fibonacci. And I told you guys, in a strong trend, the 382 will reject you. We are rejecting from the VWAP. We are rejecting from the 382. It is likely that we do continue down to make new lows. It took some time. We grinded slowly within a little channel, but we did end up doing that. You can see we were kind of grinding within this channel here, but we did end up, dumping down. And that 382 rejection, guys, anytime you see a 382 rejection on the chart, it is a strong trend. And if we were looking at pulling from the highs of wave 2 to the lows of wave 3, where your wave 4 target was going to be 382, VWAP, boom, that's your minimum target for a wave 4. And then guess what you get? The dump. Okay. Now, a lot of the other coins are dumping like crazy. Guys, I want to take a second to point out on the total market cap what's happening as well, because I covered this last week with you guys in depth. In depth, we covered this last week. We are working our way down through a bearish trend, a macro bearish trend from the all-time highs. We dumped down. We were kind of trying to hold this pitchfork band. We lost it. We back tested it bearishly. Rejected, so we drop all the way to the midline. The midline gives us a really nice bounce, but the bounce was a 3-wave corrective WXY correction where we came up and we bearishly backtested the lower limit of that upper band. We rejected from that lower limit of the upper band. So what happens? This time we flush straight through the midline. We even backtested on the low time frames, and we come down to test the bottom of the lower band. And we get another bounce from the bottom of the lower band. Another kind of 3-wavy corrector to backtest the midline. Just like the bearish backtest here on a 3-wave zigzag correction, we get a 3-wave zigzag correction. We now backtest the next major pitchfork resistance. What used to be support now turning into resistance. What happened? We dumped. We closed the daily candle below. We closed the daily candle back within our value area. The second we started closing our daily candle back within that value area, I warned you guys that this is likely to dump back down at least to the bottom of the pitchfork band again, where we're going to take out those lows, but we could get an aggressive dump coming in over the next weeks where it dumps us to the bottom of the pitchfork. And the bottom of the pitchfork happens to be some very key liquidity on the total market cap. So, bearish signs are here, guys. The bearish warning signs were here. They are here, and it looks like we could see some strong continuation in the next few days, in the next few weeks. Once again, I am expecting macro continuation to the downside, but that does not mean I am not looking for longs. I am looking for longs. I am looking to get into longs. Actually, as we speak on this stream, I hope I can get into a long with you guys. Let's check out our order flow right now and see if we are. What I would like to see is a bit of a short squeeze occur, but I want to break market structure. So until we break that 66,233, I am not looking for a long. I am telling you guys right now, counter trend trading a wave 3 to the downside will get you wrecked. You want to be patient. It is better to preserve your money and go with the trend rather than try to fight the aggressive trend to the downside and end up getting chopped up and stopped out 3 or 4 times. Losing 4 or 5% in a day, So let's just see what happens. Honey Arjun 1, hi Divine, first time here. Thanks for the TA. I am finding it a little bit difficult to see the screen. It is kind of dark. Not sure if it's only me. Guys, let me know. Is the screen too dark for you guys? I've never, Honey Arjun, first of all, welcome in. Thank you so much for joining and welcome to the community. I have never had someone mention that before. So, and it looks like Sudeep just down below just responded to you. It looks like it might be your screen only. So I'm sorry that it's hard for you to see, but it does look pretty clear on my screen. And I don't know what to tell you there. I don't know if I can change any settings on my computer to make it brighter. Maybe, are you watching it on your phone, or are you watching it on a computer or a tablet, maybe a laptop? I would say maybe try switching to a different device. It might help a little bit. Let's see here. Crypto Circus, Circus Crypto, what's up, man? I am not in a long yet. Not yet here. Where can we swing short? I'm looking for a potential swing short at $69,000. That is if we get up to there. We might not, we might keep dumping right now. But remember, guys, yesterday I covered this count for us yesterday that our wave one, actually, let me see if I can find that video, that part of the video from yesterday. Let me just go ahead and new window. Okay, let me just give me just a second, guys. I'm paying attention to the price action. All right. Let's go here, and I'm just gonna take a second here to see.
Weekends we have been seeing moves up. It's been weird because of what's happening geopolitically. But that slow, grindy move up that we see, that short position,
the end of this
level at 6. See if we start to get a real rejection here. If we fail here, it's going to be more fuel to continue.
But yesterday, pretty much yesterday in the
You could get a really nice
how our
swing long opportunity on
bring us
silver.
down to the 65, 66
And I-
report. And if that was the case, then we were looking for
The big
a
chart,
bounce
which you
from
should
this
be
to
on
create a wave.
high
two. So
volatility
I'm not gonna
moves like
spend
this,
too
you
much
should be
time scrummaging through it. If you guys want to, you can go on yesterday's live stream. I commented. I made the comment.
You get a Y in here, extending this sideways range.
We do get that
Before
wave one could bring us down to our value area low. And the reason why is
$1,000 lows.
rejecting the value area high.
Personally, I don't think that's the
reject
case.
the value area high.
I think that this entire range for the past six or 7
you
weeks
fall
looks
back
like a
into that
corrective
volume
range.
profile, you reject
And
on
I
the
do
bearish
think
back test.
because we're starting
that means
to
you're
impulse
likely to
down,
fill that volume profile.
we are
all the way
likely
down
to take out
value
those
area low.
lows.
And because we were seeing this wave one, wave two, yesterday I didn't think
The bear
bears-
market-
Well, first of all, this happened during the stream.
The
So our
monthly
waves
dips that
were
we're
seeing
seeing on the bear
during
market,
stream,
let me go to the
remember
index chart.
I was saying it's unlikely that this little thing here is a wave four.
The monthly bear dips
we
that
were
we're
also
seeing are
increasing
so
on the
aggressive
the
too.
downside on this
So
here. So I said,
on-
no, it's not likely that this
From,
is a
the
1, 2,
2017
3, 4,
all-time
5
high
that's done. I said
to
it's
your
likely that we're still in our
2021 all-time high or 2020
We ended up
all-time
getting
high
that wave four correction to
to
the
this cycle's all-time
in
high.
yesterday's stream while we were streaming.
You see
and
very
the wave
aggressive
five is
bear
coming in
dips
pretty aggressive
on
right
the
now.
monthly.
But all this 5
Money
count
flow
could be
bear
your
dips
wave one
on the
to
monthly.
downside. Your bigger wave
But
one
the
to
big
the
thing
downside.
is,
and then we're
you
looking
say you
for
don't
that
want to zoom out that
retrace,
far.
right?
Let's
We're
just
looking
look
for
for
a retrace to come up in a wave
last
two.
bull market to this
And
bull
for me,
market.
the
Top,
wave two
all-time
retrace
high.
just makes sense.
You see bear dips there.
First of all,
But
okay,
okay, you're going to say,
guys
wait, that was the last cycle,
Look at
Divine
the
Hood.
rejection.
I don't want to look at the last
Rejection.
cycle. Okay, let's look at this
I just
cycle.
showed you guys the
From your
total market cap
2024
and how
all-time high.
That pitchfork works on high time frames for that. So now that we're losing this pitchfork band, the bearish backtest of the pitchfork band, and it also happens to be where your point of control of your range is, that is where we could giga short this thing down to 60K, sub 60K. So if we get that, now, first off, we might continue dumping straight from here. We might not even get that, but that is what I will be looking for if we are going to get a retracement here. Let me zoom in because it looks like we're getting a little bit of a push up, and I want to see if we can break some market structure. I am not long yet. I told you guys I am waiting. I am being patient. I am not trying to lose money here. So I would rather stay out of a risky trade then take a very risky trade and make some money going against a counter trend trading a third wave. But let's see if we start to get some bullish signs, if we can break market structure, pretty much break above the value area low and take out these 68,233 highs. It's also the top of the channel. I would look for on the back test, I would look for a long position. Okay, let me check the chat here. Where am I at? Oh, Sudeep. I see the big red signs. What's going on here? Sorry, guys. All right, I see it was playing the sound. It was playing the sound for my last stream. I was playing a stream. I'm so sorry, guys. I thought I'd turned that off. Is it all good now? Check. Everything. Let me know, guys. Good sound now. I was playing yesterday's stream, and I think with playing yesterday's stream and me talking in the microphone, it messed some stuff up. Let's see. Spam it. It's sorry, guys. I'm sorry. Sudeep, thank you so much for the big red signs, man. That can get my attention, but unfortunately, I was looking at I pulled up a window over the chat, so I didn't see that. Dang, I'm sorry, guys. I'm sorry. We have an alien interception of divine head. Oh gosh. All right. So what I was just saying there, obviously, you guys probably didn't get any of that. But if our wave 2 retraces, if we're going to bounce here, first of all, I want to see a change in market structure before I enter along. The change in market structure would be breaking this 68,233 high. It's also where the value area low in the top of the channel is. But if we can break that, I would look for a retrace and I would long on the retrace. But I'm going to be looking around 69K because pitchforks, they work so well, guys. And once again, up at the highs early this week, rejected the upper band of the pitchfork, Now we're losing the pitchfork with volume. And so if we do bounce here, a bearish backtest of the pitchfork would make sense to me where a rejection would occur. Just like I showed you guys on the total market cap chart. On the total market cap chart, it's pretty much a high time frame version of what's happening right now on the low time frame version of Bitcoin. But you can see, you have your pitchfork band, you reject it, you fall to the midline, you come up for the lower band, you reject the lower band, you come down to that's the lower limit of the upper band, then you come down to the lower limit of the lower band. Then we come up, we reject. So what used to be acting as support now turns into resistance. So we would kind of be looking for the same thing, and we're riding the bigger trend to the downside. The trend is your friend until the end, right? Let me hide some of this stuff on the chart. But what we're looking for is we rejected the upper part of the pitchfork band earlier this week. We're losing the pitchfork band. So if we bounce here, we're expecting a back test before continuation. Let's go to the 30-minute chart and let's see if we see some bull divs on the 30. Not really, guys. I just don't like what we're seeing here. And even money flow looks like it wants to curve out again. Oh, man. Okay, guys, let me take a second to shout out the partners of the channel. Let me get a drink of water real quick here. Just give me 1 second. Okay, so the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you'll get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you do deposit some pretty large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses. And guys, if you're trading on the exchange, you're trading those USDT contracts. That's the futures exchange anyway. So you can earn extra money, up to $8,100 extra money, depending on how much volume you trade on there. So the more volume, the more rewards, obviously. And they're offering some of the best initial deposit bonuses in the entire industry. For instance, if you deposit $100, you can get a 50% deposit bonus. Most exchanges are only doing 20% deposit bonuses on $100. You can get 20% deposit bonuses up to $1,000 and 10% deposit bonuses up to $20,000. That's a really good bonus there if you do have the money to deposit $20,000. Okay, I've also partnered with BYDFI to create the Telegram community. It is a private community, but it is free. All you need to do to get into the community is join BYDFI using my affiliate link and deposit the minimum deposit of $100 or more. You can deposit more if you want to get some of those larger incentives there. But once you've done that, once you've signed up and deposited the minimum deposit, click the Telegram link in the description of this video, or it looks like Pink and Sudeep posted it in the chat as well. Thank you guys. And in that Telegram verify channel, type in /verify and then your BYDFI user ID, which is usually up to your little character. It's right next to your little character guy. But /verify and then your BYDFI user ID, and it will automatically put you into the main Telegram group. And once you're in, you're in. And guys, the money you deposit into BYDFI, you are not paying BYDFI. You are not paying me. That is your money to trade with. You are just depositing on the exchange in hopes that you will use the exchange, try it out, like the fees, like the UI, like the order books, and start using it as your primary exchange. Okay, second partner of the channel is Blowfin. And Blowfin is the second non-KYC partner that I have. I have 2 KYC exchanges and 2 non-KYC. So Blowfin, they're doing a VIP one for 30 days. And if you deposit $5, you can get a $10 voucher. That's for the first 300 users only. Net deposit bonus of $20 on 100, so 20% there. And then various deposit bonuses. And at $10,000, you get $1,000. So a 10% deposit bonus on $10,000. Lastly, the 2 KYC exchanges I have are MEXC and Bybit. Both are great exchanges. Bybit's offering up to $30,000 in futures trading bonuses, and MEXC is offering a 10% cash initial deposit bonus cashback up to $1,000. And then we have Nami. Nami is this momentum and money flow indicator down here, guys, and they just did an update. Now they have smart adaptive time frame for the momentum waves and for printing out those bullish and bearish signals for you. If you're not good at seeing them by your eye, it will show you on the chart. But Nami is what I use for my confirmations to get into trades. Right now is a really good example of that because we are at the support level. That green box that I've had on my chart for, what, 3-4 weeks? And it is the key support that we've been looking at below. The value area low, the golden pocket, the liquidity grab, the weekly level down here. We had a lot of support at this area, but I said I'm not going to take it unless we see proper confirmation, right? And so what we want to see is what I use Nami and Market Cipher B for is I look for bull divs because you want to see bull divs at support, and I also look for money flow curving to the upside or money flow bull divs. So Nami has been a tool for trade entries and exits. It helps me get in. It's my confirmation to get in and out of trades. And if you're interested in purchasing Nami, I have partnered with them to get you guys 50% off. So click the affiliate link in the description, or I think Pink posted it in the chat. And when you're checking out with Nami, use discount code Divine50 and you guys can get 50% off of that. So I was able to get you guys at least a 50% discount on Nami if you're interested. And thank you so much, Pink and Sudeep, for posting those links for me. All right. Let's check here. It looks like actually on the low time frames, we're working on flipping that midline to support, which is kind of nice. If we start to see some local bear divs, guys, I am going to, man, especially if we're in this climb right here, if we're seeing bull divs in this climb up to that value area low back test, I mean, it's likely that we're going to dump. because the trend is strong to the downside. So we would have to pay attention to that. Okay, while we're waiting on Bitcoin, what I'm going to do is I'm going to set an alert on that high at 66,233. We're going to set an alert there. I'm also going to set an alert at the lows. And we are just going to look at some of the altcoins, look at some of the other stuff going on right now until we get something that happens with Bitcoin, because we're just chopping within this, what looks to be starting to be selling exhaustion here. But we have bearish CVD absorption. Bearish absorption on the chart is not a good thing. We do not want to see bearish absorption on the chart. Yes. Okay. So let's go into Ethereum really quickly. Ethereum is at a pretty key support as well. I laid this out to you guys the other day in the live stream. I think it was on Monday. We laid this out on the live stream, but, Ethereum, first off, we fell back inside the volume profile and we were looking for the drop because we fell back inside the volume profile. We were looking for a drop to take out this liquidity trail. Remember, we were looking at like 2007 was that low of that liquidity trail right in here. But I said it would be a little bit nicer because 2007 was at the bottom of the pitchfork band. But I said it would be a little bit nicer if we dropped a little bit more into our golden pocket, which is in confluence with our point of control of the range. So if we pull a golden pocket from our lows of the range up to our highs of the range, you can see our golden pocket is coming in right at that point of control. And this is a pretty key support because we just finally swept all of this liquidity trail in here, and it is a support. So now we could see a bounce from this area. We are seeing potential bull divs on the 4 hour here, but money flow looks like garbage. We are also seeing local potential bull divs on Nami, but money flow looks like garbage. And remember, bearish money flow will always overpower a single drive of bull div. So yes, we're at support. Do I think it could hold? Yes, it is our point of control, which is our strongest level within the range, and it's also our golden pocket. If we start to lose it, man, I really think we're pretty much gonna see a rotation down to the value area low. We do have a weekly level in there, but I wouldn't expect maybe a small bounce from this weekly to backtest that POC, but I would expect that we're gonna grab the liquidity down here at the value area low. So around 1913. I did take profit on a short that I had at 1985 earlier today on Ethereum. I am not in any long trades on Ethereum. And remember, this looked like an impulse to the downside, a wave one to the downside. So overall on the higher time frames, we're still looking at a 1, a 2, and in that 2, we got the 3-wave corrective move, right? 3-wave corrective move. Now this could be the 3. Or a C. Let's just say it's an ABC, right? Even if it's an ABC, we'll pull our trend-based Fibonacci extinction, and let me fix that. In the ABC, your most common target is between the 1-to-1 and the 1.236. Your minimum target is the 0.618. We are hitting the minimum target right now. So in the bullish scenario, this is an A, B, C. C is done with, and we could go right back up. That is not my primary scenario. Even if it's an ABC, I think we get a drop a little bit further. A, B, C, coming down to the 786, coming down to that 1-to-1, sweeping in some liquidity, and then seeing a rise. But it's more likely, guys, it is more likely that we are in a third wave to the downside. And so we can put on our 1.618 target, which you can see I already had on the chart, coming down to 1683. And this could be our wave 1, wave 2, wave 3, 4, and then a 5 in here coming down to our, 1585, like 1600 to like 1568, that zone in there. But this is kind of what I'm looking for on Ethereum. Remember, if we are starting the third wave, you do see a 5-wave count within the third wave. So this could be a wave 1. We could come up in a wave 2 to the golden pocket, 3, 4, 5. To end our third wave. So I'm not saying that we won't see bounces along the way. We are at support right now. Let's go on to the 1 hour chart. Yeah, I mean, Ethereum actually looks nicer than Bitcoin as far as we do have bull divs on the 4 hour potentially. We do have bull divs confirmed on the 1 hour here. Bull divs confirmed, much better looking than Bitcoin, but bull divs on the money flow here on Nami, which is a big thing that I look for. So we actually have a majority of that setup that I look for a change, for a long position, for an entry. The only thing I don't like is how bearish the 1 hour money flow looks on Market Cipher B. But could we get the bounce? Yeah, I mean, this is where we would expect to start to find that range come in before seeing a move to the upside. Now, let's talk about if this is going to be a bounce here in a wave 2 to the upside, right? Because this is all the start of our third wave. 1, 2, 3, 4, 5, right? That's our first wave to the downside. Let's pull our Fibonacci from the highs to the lows, and let's look at our golden pocket for our wave 2 correction. Well, where is your golden pocket at, guys? It is at the value area high. And if you bounce from the POC, you expect to rotate back up to the value area high. So I would be expecting a 3-wave zigzag move up to about 2112 to 2120. And this here could be your prime short that pays big. I will be looking for that short there. You also can see you have that 1 hour order block in there, that little order block zone in here. I mean, it looks like it could be a very, very nice short if the low is in right now and we're going to make that move up. That is what I'm looking for. Let's go on to the 12-minute. Now, Ethereum looks stronger than Bitcoin right now. I have to say, it looks stronger than Bitcoin. We are seeing 12-minute bull divs. We are seeing multiple drives. We're seeing money flow bull divs. And what we need to look for on Ethereum is, I would say, a change in market structure. Now, in order to be really safe, you would want to break 2009, but that's a bit high to look for the long. So maybe if we break this market structure at 1996, you break that market structure, you get a pullback, and on that pullback, we can long. And we can also look at a small range that is developing here. We are developing a range here at the support level, so we can pull a volume profile, a low time frame volume profile. And yes, we're rejecting value area high, but if we can actually get above it, break 1966 or 1996, excuse me, and then get a pullback to value area low, which would probably be right around where your golden pocket would be, that could be your long position. So around 1977. Sounds like I'm talking about a bunch of years here, but let's just say, yeah, something like that, you know, in that general area. Until we start to break market structure, I'm not looking for the long, even though we are seeing better confirmations on Ethereum than we are on Bitcoin. We do know that the market will follow Bitcoin, and if Bitcoin continues to dump, Ethereum will lose this support level, and we will continue down. Okay, let me go ahead and zoom out. Let's look at another thing to look at, guys. The pitchfork band, the upper limit of the pitchfork band, the lower limit of the pitchfork band. You can see that earlier today, after losing the pitchfork band and bouncing from the POC, we came up to backtest that pitchfork band and we lost it, or we rejected on that loss. So that is a bad sign to me that we've already backtested the pitchfork band here and rejected. And because we lost it, bounced from POC, rejected here, we actually are expecting to make one more local low. You want to take out that local low. So if this range is forming, maybe if we get an SFP of today's low at 1970 into your 0.65 golden pocket, which is at 1968. But we'll just see, you know, it doesn't have to make that low. It's more probable to, but it doesn't have to. So let's just keep an eye on this. But this does look, actually, what I'm seeing with Ethereum, I would rather trade Ethereum right now than Bitcoin because it looks like it is a little bit stronger. All right, let's see. I want to zoom out and I want to look at some levels we have within this. Oop. Yeah, you can also see our bullish pitchfork, which is based off this 7-week long range. So let me just clean up this chart just a little bit here for you guys. And we will look at the bullish pitchfork. So this is our bullish pitchfork, low to high to low. We're at the POC, and it's also the bottom of the pitchfork band, your lower pitchfork band. It's at the bottom, and it's also your golden pocket. So this is very strong support. And then once again, guys, if we lose it, what's next? The value of the bottom of the pitchfork in confluence with the value area low and a liquidity grab. So that would be the next support zone, but we are at support right now. Next support I would be looking at, the next long would be 1911, an SFP of 1911 into the bottom of the pitchfork. In between, I'm not looking for anything. Actually, maybe even a short, like a scalp short, if you can manage to get into one. You do have a daily at 1936, but I wouldn't be expecting too much from it. Yeah, I would say your next zone of support, for sure, your next zone of support is going to be this zone in here. About 1911 to 1900-ish. 1897. But remember, overall, even on Ethereum, this entire range that we've been seeing over the past 6 or 7 weeks looks like a corrective range to me. We are in a bear market, and all these sideways and corrective moves, we always get that blast off top at the top where everyone longs up there, and then what happens? It always breaks down. It's just the classic market makers playing their games that retail has not figured out yet. It does look decent here, guys. We are at support. I do not like the way money flow looks. Let's go to the 8-hour chart. The 8-hour is really good to look at for money flow. Man, it's just about to cross into the red on money flow. And Nami is actually just about crossing into the red too. Oof. And then if we do get the bounce here though, guys, look at what we just laid out. Our golden pocket was at the value area high, but it's also your midline of your pitchfork. And as far as pitchfork trading goes, if we bounce from the lower band, we're looking to come up to bearishly backtest that midline. To me, man, I hope we can get up to 2114 or so, because I will be looking for a giga short there. That would be really cool to see. Let me talk about, I need to go to Bitcoin, back to Bitcoin for a second, and I want to talk on the high time frames about what we were expecting at, on the bearish scenario, the macro bearish scenario. I was looking at two options, right? We were looking at first a 5-wave impulse to the downside. 1, 2, 3, 4, 5 with an extended 5th wave that would bring us down to 57, 58K. But because this range lasted too long here, it now invalidated, not a hard invalidation, but it made it far less probable that this was an impulse to the downside, a 5-wave impulse. And it now made it more probable that this was a WXY correction, right? And inside your W, you have 3-wave move with that kind of triangle in here in the W wave. In the X wave, you have your 3-wave move. And then in the Y wave, I did say there's a very small possibility that this could have been the Y and the 60K's low is it, and then we go up. But based off timing, it was far less likely. So we wanted to see a 3-wave move where we are, even in the WXY, you're still expected, the minimum target is to take out 60K. But if we pull our trend-based Fibonacci extinction, so first off, you can see from our bigger trend-based Fibonacci extinction pulled from the all-time high to your W lows to your X highs, the 1-to-1 and the 1.236, we're bouncing pretty much from the 1-to-1. Our daily candle closed at the 1-to-1. But our Y wave doesn't look like it's done yet. So if we're looking at the Y wave and we can pull a trend-based Fibonacci extinction from the highs of Y, from your, inside the Y wave, you're pretty much looking for an ABC, right? ABC in here. Or a 3-wave zigzag move, whatever you want to call it. If we pull that trend-based Fibonacci extinction from 98K down to 60K up to our, 76K highs, and we look at the most common targets. Delete that. Let me just pull that. It's right here, but I'll pull it again for you guys to show you. So you take that trend-based Fibonacci extinction from the highs to the lows to the highs, and we're looking between the 1-to-1 and the 1.236. So Bitcoin could get very aggressive to the downside, right? This Y wave could be boom, boom, all the way down here to 46 or even 41K. But your minimum target for a Y wave, your minimum target for that zigzag correction is the 0.618. So let's go into the settings and let's turn on the 0.618. Whoa, where's that being located at? Well, that's pretty nice confluence for me. $56.5, $57,000. It's where your pitchfork midline is. It's where that support is. I mean, it's where your 1.236 is, right? In the bigger move. I mean, that I'm telling you guys, 58 to about 50, 57,000, 56.5, looking really, really good. And it could be just that the Y wave is going to be hitting the minimum target, and then we're golden. But that means we're expecting a dumpage for the next few weeks to come down there. And you want to see impulses down. 1, 2, your third wave, 4, 5. All right. Let me see. Just got in. Sleepy, welcome in. Thank you so much for joining. Guys, can you still hear me okay? Let me know in the chat, please, if you can hear me okay, or if everything is working properly. Looks like something might be okay. Yeah, a bunch of liquidity stacked at 54K. I like 54K a lot, Shichan. 54K is a okay, thank you, Sudeep and R Pink. 54K is definitely a big level that I'm looking at. Let me show you here why 54K is a big level that I'm looking at. So if we break 58K, 57, 58K, yeah, 54K is the other big level that I'm looking at. First off, at the weekly, we have a weekly down there at 54,850-ish, let's say. 54,850-ish. But if we combined over the last 2 years, 2024 and 2025, we had a very clear established range in 2024 that lasted about 8 months. That was this range right here. And then in 2025, we had a very clear established range. I call it the all-time high range, right? This upper range in here. A couple months ago, we broke this range down, this upper range. Let me actually throw that on the chart. We broke this upper range to the downside. You can see here it was holding, breaks down with a high amount of volume, and we fell back inside of this range. And if we look at this range, we fell back down and we fell to the value area low of the range. That's exactly where our low was, at this value area low. So what did the market tell us? The market was telling us we're no longer accepting the fair value for Bitcoin between at the 2025 prices, right? The 2025 prices, about 97K was considered fair value for Bitcoin. It was considered expensive at around 113K, or on Coinbase, I think it's 116K. And it was considered undervalued or cheap at 86K, 86, 87K, right? But when you break this upper range down, now the market is repricing the fair value for Bitcoin. It's saying we no longer accept that the fair value for Bitcoin is in that level, up in this range. We want to see lower prices because we think it is, for whatever reason, right? They reprice it. The market is repricing it. So we fell back inside of our 2024 fair value. What happened? We chopped around and formed a range inside of this 2024 range. We peaked out of it just a little bit to reject an anchored VWAP, to reject a volume trend resistance. And now we're falling back inside of that volume profile. You can see we're even losing the POC of that volume profile. So the market is now saying the new fair value for Bitcoin is back to 2024 prices. Now, when that happens, when you find reacceptance back within an old range, being this case, the 2024 range, we can take the two ranges and you can combine them to make one bigger range. And when you combine them to make one bigger range, what happens? You can see you're right around the POC. The value area high was a key little area where there was a rejection, but where is the value area low? It is at that weekly support. It is at about 54,000, 53 and a half. It's at 53 and a half, but it's also the bottom of our pitchfork. And this is our multi-cycle pitchfork, guys. And one thing I have to say about this pitchfork, let me just zoom out to the 3-day time frame. This pitchfork has been so well respected the entire bull market. You come up, you reject from the lower limit of the lower band. Then you reject from the upper limit of the lower band. You break above it, you flip it to support. Then you flip it to support, you come to the midline. That was your 2024 all-time high, was at the midline. You reject the midline, you chop down sideways for 8 months, you bounce from the upper limit of the lower band. Then you push up this time to try to break through the midline. You do, but unfortunately you form a distribution range right above it. This was distribution. I made a video on it telling you guys it was likely to happen before it did. And then we dump it, we lose it, we backtest it, we make new lows, right? And then after making new lows at 74K, which was also a very important support, it was our lower band of a different pitchfork. I guess I don't have that on the chart anymore, but it was an important support. I've shown you guys this many times. And then what happens is you make another run at the midline, right? Let's see if we can test it again. One rejection, $10,000 drop, but it was a 3-wave corrective move. Oops, didn't mean to do that. It was a 3-wave corrective move, boom, correction. And then what happens? You make another attempt to break it, and then you form another distribution range here, right? But you did get a little bit of a peak above it and some days and weeks above it, right? In here. But the big thing was it was starting to form a sideways range up here. And this was what was important. This sideways range was likely to be distribution based off the bear divs and money flow draining out on the 1 day as the range was forming. Where did we reject at our all-time high? Pretty much the back test of that midline. Okay. And so now we're rejecting the midline. We're losing the lower band. We lost it with a high amount of volume. And so what's more likely, guys? There was 2 likely scenarios within this low, from this low, that we get a move up to back test it and reject and come down, or you don't even get up to it. But if you do start to lose this low here, you're likely to come down to the bottom of the pitchfork. And where's the bottom of the pitchfork? Right at that key support of the value area low and of the weekly support down below. So yeah, 54K, you know, I would say 55 to 53 and a half. Let's just say that, or 54.9 to 53 and a half is where that could be crucial support if 58K doesn't hold. Remember, 58K is still a really strong support, guys. I think 58K could give us that low. We have our anchored VWAP from the bear market lows, right? Anchored VWAP from the bear market lows is right there. And that's your macro trend support, volume trending support. We have a naked monthly point of control in that box at 57.9. We have a naked weekly point of control at 57.9. We have 2 daily levels right in there, right in that zone. And of course, most importantly, your anchored VWAP. But we've also got pitchforks in there. You know, this pitchfork right here, the midline is pretty much at 57K. We have a giant amount of support at 57K, 58, 57. To me, there's more support at 57 than there is at 54. But they're both really good levels that are macro support levels you need to be paying attention to. You need to pay attention to those levels. And knowing that we are likely in an impulse to the downside, look at this bearish 3-day engulfing candle. Holy cow. knowing that we are likely in a dump, an impulse to the downside, it's likely that we could, we should drop below 60K to one of those support levels. Now, it could get even much worse. We could drop to that $41,000 or $46,000 area. It doesn't have to stop there, but those are big support levels. Weekend dump. Weekends have been hard because there's a lot of geopolitical events going on right now, and it's making the weekends more volatile than they used to be. All right, we're starting to get a little bit of a rise here on Bitcoin, guys. Let's really pay attention to the top of this channel. It's also the backtest of the value area low, and it's where our market structure change could come in. But look at what market cipher, I don't know if you guys can see this. Let me pull this up full screen. Market cipher is starting to roll over again here on the 15-minute chart. So if we come up maybe 2 or 3 more 15-minute candles and reject and your money flow starts to roll over, man, we could even look for a scalp short here and leave some of it open to ride the trend, right? We short this, stop would go above that local high, and all you're looking to take out the lows. Again, that's a 6.66 risk to reward ratio there. Maybe let's make it a little bit different so it's not that. There we go. And on a short, and guess what? Take 50% when you take out this low, leave the rest to run just in case this wave 3 keeps dumping. And because your stop loss and your invalidation is so tight, you can get a really nice scalp trade there. High position size. Let's look at this during the stream. Let's see if we can't get that. Let's see if we're seeing bearish CVD absorption still. Yes, we are. We're seeing bearish CVD absorption, guys. We are still seeing fresh longs step in here. Fresh longs are stepping in here. They are still successfully not able to break the price up. We are seeing bearish CVD absorption. So I actually am interested in taking this short position if the opportunity presents itself to us during this stream. Let's hope we get it. And let's see if Ethereum is getting a nice bounce or not. Man, come on, Ethereum. Take out that 1996 level. Alerts set. It doesn't, it's going to roll over here. It's going to form a triangle here. We're going to see some sort of triangle right here. And, are we going to not even make it up there, right? Selling exhaustion starting doesn't mean that it's appropriate to long yet. And we're seeing bearish CVD absorption. Absorption plays out like 80% of the time or more. So I am definitely not looking to long against bearish absorption in a wave 3 to the downside. 48K is the real support level from 2021. Yeah, so we definitely do have some bigger support levels down below, in the 40s. But here's the thing, guys. We play level to level as traders. So we're not looking necessarily at 48K until we take out 57 and 54. Now, yes, you absolutely can keep that in mind and have that on the chart and know that that's a very key level we could fall to. But, as far as our macro time frame goes, we want to see, once we get down to those more macro support levels, what the momentum looks like, the money flow looks like, if we have bull divs, because we don't know where it's going to stop, but we know the key levels, the key big macro supports to watch, right? 58 to 57, 54 to 53, 54.9 to 53.5. And then, I think the liquidity grab of 49K is a very important liquidity grab, right? Remember this low on the total market cap chart? Let's go to the total market cap chart. That low on the total market cap chart there at the bottom of the pitchfork, your bearish pitchfork. So that low is not only key liquidity, but it's into an important support. Well, for Bitcoin, it's quite a bit lower than your pitchfork is, but it is still important liquidity down there. And man, guys, if we start to lose the lows of this range, you know, it's not too crazy to say we could see 34K. But let me tell you guys, if we do see, now, first off, the move from 15K to our all-time highs at 126K, that is obviously more than a 100% move to the upside, right? More than a 100% move. It is close to, well, it's 717%, let's say. So if we're pulling a Fibonacci retracement from the low to the high, we have to make sure we're using the log scale. Because look at your improper golden pocket, which is not a proper 61.8% retrace, is at 58 to 54K. But that's not a proper 61.8% retrace, which is psychologically ingrained into the human consciousness. So if we go into our settings and we turn fibs based off log scale, it's going to shift that golden pocket to a proper 61.8% retrace. Where is it at? 34.5 to 32K. What is the most important support resistance flip in Bitcoin's history? That area, right? Support, 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 resistance, resistance, resistance. So if we come down, and I know everyone says there's no way Bitcoin's dropping into the 30s again. There's no way. Yeah, there is a way. And it could come down there. But at this level is literally where I take out a loan or sell my liver, or whatever you have to do, right? Get some money and buy some Bitcoin. I hope it doesn't come down that far. I honestly hope that the mid 50s, the low 50s is the bottom. And now that we're looking at this, guys, being a WXY correction to the downside, WXY to the downside, after that WXY finishes, it's the biggest probability, the highest probability is to see a motive wave to the upside. Now that motive wave does not have to take out the all-time high, but oftentimes it does. That motive wave could just bring us up to a golden pocket to make a lower high before making another lower low. But your next major low, macro low you see on the charts is definitely a good swing long position. Swing long. Multi-$1,000 move, $20,000 move to the upside, $30,000 move to the upside. All right, let's see what Bitcoin is going to do. Oil still pumping. Awesome. Well, I'm long on oil, so that is very good. Let's see here. US oil. Heck yeah. All right. I think I just hit a TP1 actually. No, I set my TP1 actually on this high, 101.67. But I'm looking to potentially come up to this 103 because we front ran 103 last time. And I'm potentially looking to come up to 103. On oil. But you can see we were chopping around. Oil was chopping around within this descending channel. Let me just get rid of this for a second. Descending channel in here. We saw a fake out to the upside. Then we saw at the downside, you saw a lot of wickage in here, but really the bottom of the channel held for the most part. You break above, you come up to the top, you reject the top, but you hold the midline here. And upon holding the midline, now we're breaking out of the channel and we're breaking out pretty nice volume. But I'm looking for that bigger kind of bigger three-wave corrective move, right? In here. And gosh, this looks like it could be, 1, 2, this is a 3. Let's actually look at this because this could be a contracting diagonal. 1, 2, 3, 4, 5. In a contracting diagonal, which is a motive wave. For your wave 1, you have your contracting diagonal. Then you get your 3-wave pullback flat in a wave 2. This is your big wave 3 right here. So we can actually pull our trend-based Fibonacci extinction, right? Our extinction level. Inside joke from the channel. and we actually pull it to this low, not this low, even though it's lower, we pull it to the lows of the running flat. Yeah, 101.67, wave 3. Boom, taking out liquidity right into your 1.618. I mean, oil looks like very nicely we could rise up to 101.85, and I just need to double check my TP level real quick. Give me just a second here, guys. I want to make sure I lock in profits there. Where are we at? There we go. Okay. Awesome. Yeah, and honestly, it could keep going. It doesn't have to end at the 1.618. Your third wave could keep going until the golden pocket too. And then you could get a pullback in a 4 before seeing another new high in a 5, maybe at the 786 Fibonacci. But we also know oil is highly affected by what's happening right now, and there's massive uncertainty on oil. I think today was the day, like the day Trump said that he was going to go in hard if Iran didn't open the strait. So I don't know. Honestly, I've been paying attention to the charts, not the news. But I don't know if any of you guys have any insight on that. Please share it. Zephyrus FH, welcome in, man. Should that be 72K first or 50? Should here, wait, let me see if I can make start a poll. Okay, let me just do this real quick, guys. All right, I started a poll. You guys, let me know what you think in the chat. 72K or 58K? Which one comes first? 29K is a major liquidity sweep from 2021, where BTC first flipped it to support. Yeah, I think, 29K is like low 30s, low 30s, high 20s is like that big level, right? I heard you have a kidney for sale at 32K. Yeah, Mr. Recession, I sure do, man. You a buyer? You want to buy it? I'll take Bitcoin as payment. Okay, Trump is now postponed that deadline by another 10 days. Okay, thank you, Crypto Shot 256. Also, welcome in, Mr. Recession. It's good to see you in here, man. I'm very glad that I found you through Jason. Well, thank you, Zephyr. Appreciate you being in here, man. Yeah, Jason's amazing, dude. Jason is a big mentor of mine, a genuine friend of mine. The guy's an excellent trader. I did have a little bit of a different bias than him on, he was thinking 85K just based off of his style of trading and what his confirmations he was looking at as a possibility. I really wasn't thinking we were going to get up there. There was a small probability, but it was the lesser of the probabilities. Okay, let's see. So you guys, wow. Right now, 57% of you think we get to 72K first. Interesting, guys. Very interesting. 24 votes. Okay, please vote. Also, guys, please hit the like button for me. If you are getting any sort of insight into the market from this live stream, please do me a favor and hit the like button. Subscribe to the channel. Okay, let me see here. I'm just checking this out. All right, let's go back to Bitcoin. Why is it that as soon as we start the stream, well, I guess Bitcoin was doing this all morning, so it's starting to dump again, boys and girls. Like, Bearish absorption. We just printed, okay, on the 12-minute chart, guys, we just printed a hidden bear div, and it's confirmed. Money flow is starting to roll out on Market Cipher B, and we are seeing bearish absorption in here. This is not a good sign for the bulls. I do think we could absolutely start to nuke again here. We slow down. Everyone thinks selling exhaustion is coming in. They all start longing in here, and then because of that, you nuke again. Just like in here. You're starting to see some selling exhaustion, nuke. We are seeing on the aggregated CVD, guys, on aggregated open interest, excuse me, not aggregated CVD, but aggregated open interest, whole lot of longs have been coming in for the past 3 or 4 hours. And price is still not able to break market structure bullishly, even on the 5-minute chart, 10-minute chart. It does look like we could see the dump get aggressive. Now, I am still in a short from Sleepy. By the way, shout out to Sleepy in the chat. The reason why I got into this short, because a couple weeks ago on a Tuesday during a live stream, we were looking at, where was it? 74K up here in this little triangle that we were seeing right in here. We were seeing bearish CVD absorption in this triangle. And remember, we had a golden pocket that was right above that triangle that I was looking for the liquidity grab of New York open high into that golden pocket. And I wouldn't have taken that trade because that was all I was looking at. And then Sleepy points in on the comments and says, hey, no, we're seeing bearish absorption here. And that's why I shorted this golden pocket retrace right up in here. So this is why, guys, this is why it is really important to develop a community of good traders that understand what they're doing. They're all educated. And we all help each other. Instead of competition, everyone puts out their ideas, and everyone works together to dominate the market makers. Rather than fighting amongst ourselves and competing against ourselves, we team together as the little retail traders, and we go up against the market makers. And this is why, for me, it is important to build a good community and to listen to your community members and look at their ideas, look at your own ideas. You compare them. Of course, you should always first and foremost be paying attention to your own TA, because you're the one making the decision on whether you're clicking that long or short button. But building a great community really is a special thing, especially when you have a bunch of good traders in there that have different styles, but they see different things. Like I wasn't seeing that. All I had to do was click over onto the order flow chart and look at it, but I just wasn't seeing it. I was paying attention. I was so locked in on that SFP into the golden pocket that I didn't see it. And then and Sleepy pointed it out, boom, there you go. In that short still. Now I'm 90% out of it. I wish I wouldn't have taken so much profit so early, but I compounded it. I did compound it. I can't remember. I compounded it right here on the back test of the pitchfork band right here. I did pull some out at the POC, and I did not compound it up here last week, or this week, I guess I could say, but I'm still in that. I did actually take like 25% more of what I had left of the trade out at this green box of support down here. So now I'd say like I'm 92.5% out of that total trade. Dread Mining, welcome in, my friend. Does my long have a chance right now? Bears are in control. Well, Dread Mining, let me show you this on the order flow charts. This is using the aggregated open interest. Now, first off, when you see a big aggressive dump and then you start to get this choppy overlap, that is selling exhaustion that's coming in, meaning you could see a reversal, right? You're finally starting to see the selling exhaust a little bit, which often does give you that push up. But when you're seeing this selling exhaustion occur, but you're also seeing bearish CVD absorption on the charts, it's generally a trap, right? It's generally a trap. So look at this from this initial low, or the high, right? The high of this channel. Let's just throw a vertical line on that high. The high of that channel, let me make this 1 pixel. That is where your CVD is at right there. So we are making higher highs on the CVD right now. We are making lower highs on the price action, and your open interest is steadily increasing to the upside. This is textbook bearish CVD absorption right now, which plays out about 80% of the time. So a lot of longs are stepping in, and it's going to be used as fuel to get that big squeeze down if we do break down. The bulls have a chance here, but they are not doing very well right now, and they're struggling. So dread mining, I would say be careful. If you're long from the weekly, I hope you have a proper invalidation for your trade. I would say, man, like, okay, the weekly was at, let me throw that weekly on the chart. The weekly's at 65.7. Okay, you're at break even right now. You're at break even right now. So if I was you, if I was in this trade, and by the way, this is not financial advice. I am not a financial advisor. If this was me and I was in this trade right here, my stop would be below today's local low. And honestly, my first TP would be targeting those channel highs. That's still a 3-to-1 risk to reward ratio, but I'd probably only take out 25%, because if you do something like this and break out, sweep those highs, come back down for a higher low, and then you get the big push up to 69K. Dread mining, 69K is a big resistance, okay? Because if we're looking at also our Elliot wave count that I pointed out at the beginning of the live stream, we're looking for a big third wave, right? Overall, on the high time frames, we're looking for a 5-wave impulse down. We're looking at this big 5-wave impulse down over the next month, right? Months or so, weeks to couple months. Wave 1, wave 2 on Wednesday was the high. It was a 3-wave corrective move. So we're in the third wave, the most volatile wave to the downside. But within this third wave, you are going to see 5-wave sub count within inside of it, right? So what we're looking for now within the third wave, if we're going to see a 5-wave sub count, you're looking, this could be a wave 1 that's done, bouncing at your support right now. Your wave 2 coming up to your POC and the back test of that pitchfork band at 69K, that could be the start of this wave 3 within the bigger wave 3. So I'll be looking for 69K as a short position. Yeah, stop loss is tight. Awesome, man. Sounds good. And I know you've been trading for a while and part of Jason's community for a while, so I know you know what you're doing. TP1 at local range high at 66.6. Okay, nice. Yep. I think that is a good area to be looking. That is, I believe, the top of that channel. Yep, 66.8 on Coinbase, but very, very good. Very good right there. All right, I'm going to hide those. We still have our alerts set, and they'll still go off, but I'm going to hide those just to clean up the chart. We'll hide this guy. Man, guys, I just, it doesn't look good right now. It does not look good for Bitcoin. So I guess now that we've had 11 minutes go by, we have 53 votes in the poll. 54% of people say 58K. And we do have 46% of people that think we're going to go to 72K first. Wow. Interesting, guys. It's interesting. You know, anything can happen. The most probable scenario, and I've been very consistent, just like on the last range that we saw, this range between 80,000 and 98,000, I was very consistent this entire range that this looked more corrective and we were going to actually take out the 80K lows at the very least. I was very insistent on that. And especially when we were rejected from the anchored VWAP, I said, oh, well, that's it. You know, I thought we were going to get some sort of bounce at 72,000 because that was our golden pocket and our value area low, but we didn't. But I was consistent this entire time that this was corrective, more likely to be corrective. Now in this range here, It has been a little bit more complicated than this range, but I also said that this was likely to be a wave 4 correction before seeing a 5. And then when it extended too long, I said there was a small possibility that we are going to get a 1, 2, 1, 2, 3, 4, 5, 4, 5. But when that failed, for the majority of this range, I've been saying that this is a corrective range. There was a couple days where it was starting to look like the bulls had a chance to break out, where we did, I wouldn't say shift our bias, but we kind of altered our bearishness from like a 90% bearish to like 50-50, more of a neutral. But in this entire range here, I've been really saying like the bigger probability is that this is a corrective move before taking out 60K. Been very consistent. You guys can go watch those past videos, but man, like look at these 2 daily candles, guys. Big daily red candles to the downside. When we close today, if we close this bearish, our money flow is going to be coming out very aggressively on Market Cipher B, and it's probably going to be crossing into the red on Nami. What is setting up very nicely, though, if we get that impulse down that lasts a couple weeks, right? 1, 2, 3, 4, 5 coming down here, we will see some very nice aggressive bull divs probably. Bull divs between the 60K low and your 57K low or wherever it's going to come in at. We will also see local bull divs probably on Nami, multiple drives of local bull div in here. I'm telling you, the next macro low we make is very probable to be a swing long opportunity. It's very interesting. The poll is almost at 50-50, guys. It's awesome, you know. Thank you guys for participating in that. Okay, lower, yeah, I Fearman 52, I think lower as well. Still think I'm gonna get stopped out. Things looking weak, and what's the chance this golden pocket holds again? Yeah, I just don't like the bearish absorption we're seeing on the charts here. And look at this. You see how open interest is finally starting to dip just a little bit? This could be the start of a long squeeze, and a long squeeze is a dump to the downside. You're squeezing out all those long positions that have been longing in here. We are seeing all day long, pretty much, long positions stepping in, fresh long positions stepping in. So if we start to move down aggressively and you see your open interest drop aggressively, it's a long squeeze to the downside. Okay, let's see. Trump is going to speak soon. Okay, and we will know what can happen, but I think it's going to be an Algoland weekend. Yes, definitely algo trading, or honestly, like the algos are obviously flipped bearish right now. The algos could keep pushing us down. We could just see us grind down all weekend. Where do I see the Bitcoin bear bottom? Honestly, I'm hoping it is around 57 or 54K, but what it's more probable, you know, with the bigger WXY correction. So let me go to my Bybit chart here. If we're looking at this as a WXY correction and we do stop around 57K, after a WXY correction ends, you're more probable to make a motive wave here, right? So I would be saying there's 2 possibilities. The motive wave comes up to the golden pocket and rejects us at the golden pocket, but that's still a really nice swing long. I'm just going to throw it right on the midline here. And that golden pocket would be around 95K or so. Let's do right in here. Yeah, about 95K or so. Or we're going to see this impulse, this motive wave could carry us to new all-time highs. So I think that it's really hard to predict the bear market bottom, but there's key zones that I would be looking at. And first off, anytime you see a 5-wave impulse. So we saw this as a wave 1, a flat, and a wave 2. Here was your wave 3. Here was your wave 4. And then here was your wave 5, right? And then we're seeing this flat correction come in right now, this bigger flat correction come in. But oftentimes, when you see a correction come in, you will take out the lows of the wave 4. and you bounce after taking out the lows of the wave 4. So because of that, knowing that information, if I do go to my index chart, what do I have marked out at those lows as a potential? It's the midline of our channel. And if you look at this big channel, let me just go out onto the 3-day time frame. This channel is a trend channel pulled from the 2021 bull market highs down to your 2022 bear market lows. You can see that the midline has been respected very highly. Midline respected, midline flipped, respected in here. If we come down, wick that liquidity right around the midline, that could be also the bear market bottom. And then what we're hoping not to see is a weekly time frame distribution pattern, like we just saw on a Solana play out, right? But you could be looking at this as tap 1, tap 2, and if you do come down here, grab liquidity, make a move up, tap 3, there's your weekly distribution, and then you dump from there, because we do see those bad weekly bearish signals. I'm hoping that's not the case. I'm really hoping that we get something like this and then this. Or, you know, something, a bit of an extended range that forms for a couple years or so. Okay. What's the chance for a real bounce at the 200-week moving average? Where is that 200-week moving average coming in? Let's see. Here's the 200-day. We're way below the 50-week moving average. 200-week moving average. Let's see. Oops. Yeah, I mean, look at that. That 200-week moving average is coming in right around our 57K, 58K support. That would actually be really nice to see. Historically, bottom, yeah, you wick past it a lot during the COVID crash, but it was the bottom on the weekly chart with the wick going a lot lower. The only time that we really deviated below it was when we saw FTX crash. But that is another really nice confluence for the mid 50s, right? Mid to high 50s. So thank you for pointing that out, Dread Mining. I think that could be one of those areas. I don't see any reason to close my short from... No, definitely. I wouldn't be closing my short from 74K either. No way. No, no, no. I'd be compounding it on bounces is what I'm looking to do. I wonder how Trump is going to affect the market today. Well, he knows the market's dumping hard, so he's going to try to come out dovish. You know, I think Trump pays attention. People say that Trump doesn't pay, or he says he doesn't pay attention to the stock markets, but that's such a lie, and we know it. So we know that he's going to pay attention to this, what the markets are doing, and he doesn't want them to crash on his watch. So I think he is going to try to influence it to the upside somehow, but at the same time still be strong on his take on, like, hey, we will go in if we need to, boots on the ground, all that stuff. BTC bottom 39K, macro 786. Well, here's the thing, Dread Mining, that's not the proper 786 Fibonacci pull though. And I get what you're saying. It's, if you're not using the log chart, let me just go to the index chart real quick here. The actual golden pocket is at 34 to 32.5. And what you're looking at, because this move up from the bear market lows to the all-time highs is more than a 100% move to the upside, and you are on the log scale chart, when you're pulling your Fibonacci from the bear market lows to the bull market highs, or to your all-time high, if you do not have your fib set based off log scale, you can see that 57K to 54K is the non-log golden pocket, and the 786 is going to be at 39K. But here's the thing, that is not a proper 61.8% retracement. Let me go back to the golden pocket here, And then let's do a little experiment here to show you guys what I mean by that. So we know that, first off, 61K is psychologically ingrained into the human consciousness. 61.8, it's that golden phi ratio, right? So let's take a trend line or just a line, and we'll go from the highs to that 618. We don't have to be super precise, but that's your retracement. Now we'll go from the lows to the 618. Now, if it's a 61.8% retrace, it should be, this retrace should be longer than this. Is that the case? No. So that is not a proper 61.8% retrace there. Now let's look at it on the log scale, where you do now have from the highs to that 61.8, okay? And then from the lows to that 61.8. Now you're seeing that that is longer, and that is a proper 61.8% retrace, which is psychologically ingrained into the human mind. So you do have to flip that Fibonacci to log scale, man, in order to get the proper psychological level where humans tend to have that golden pocket effect, right? Now, a lot of people don't know that. So yes, you will still get reactions at non-log golden pockets and non-log 786s. You will, absolutely. You know, it's kind of like we make it happen because so many people are paying attention to it and using it. But the proper 61.8% retrace log scale is really important to use, guys. And on high, first of all, using the log chart on high percentage fluctuations in price is important to use. And if you're using the log scale, to flip your Fibonacci retracements to based off log scale as well. I hope that helped understand that a little bit. I should probably clip that and post that so that people can see that difference. When to entry? Well, I'm looking for an entry right now, but I don't see confirmation. And we're seeing bearish divergences or bearish CVD absorption here. So I'm looking, if there's a couple things. We need to break market structure bullishly. If we break market structure bullishly by taking out 66,233, then I'll look for a higher low and I'll look to enter here. But until we do that, I'm not entering long because we could just crash right back down or continue crashing down because we're seeing bearish absorption. Around the 17th of April, we'll have 6+ planets in Aries. So for me, this is the time for the biggest impulse of the whole year. I'm guessing with 60%, it's going to be bullish. Okay, well, thank you, Golden Liquidations. Let's pay attention to that. And will you keep us updated as we get closer to that day, Golden Liquidations? Will you keep reminding us about that? And it's interesting because I do think we also are electromagnetic beings, and we are affected obviously by full moons, obviously by things like that. So I would be interested to see what happens with that. No excuses. Welcome in, my friend. Appreciate your TA and consistency, bro. I'm also a member since 2 years in Jason's Discord. Like your style of TA. What's your target for the swing long from the 50-ish area? First of all, no excuses. Thank you for the kind comment. Really do appreciate that. And thank you for being part of my community as well. So what I'm looking at, if we do bounce from 57 or 58K, my main target, and I will leave some open. It's a swing long. I will leave a small percentage of it open to all-time highs if we do see continuation, right? Like the big thing is after this WXY correction ends, depending on how we move up, if we move up first in a motive wave, a 5-wave motive wave, and then we get a 3-wave correction, I will leave it open, and then we get another 5-wave move, and this one's even longer, right? Because it would be, these would be daily time frame impulses, and then we'd be looking for a bigger weekly time frame impulse, right? If it's going to take out the all-time highs, we'd be looking on the weekly time frame for a wave 1, wave 2, wave 3, 4, 5, right? To take out your all-time highs, something like that, you know? But I would be looking at, based off every pullback, if it looks like a corrective pullback, I wouldn't take profit. Now, what I might try to do is if I long 54K, at the end of that first daily impulse, I would probably take some out once we started getting into our 5, somewhere within our 5. I would take some out, but I would look to recompound it if we get a 3-wave move on the end of the C or the Y wave, you know? And then I would look to take some out here, compound it here, and then towards the end of the weekly 5th wave, complete TP, short. But if we're moving up to the golden pocket, so let's just say we're gonna make a lower high. We're gonna bounce from the 50s, but we're gonna make a lower high. The most common area where you would make a lower high is, once again, the golden pocket. So let's just put it at 58K, right? And that golden pocket coming in around 100K. And that, by the way, actually, guys, you need to make sure that's on log scale as well. And the reason why, on a move to the upside, if it's more than a 100% move to the upside, you switch your fibs to based off log scale. If it's more than a 30% move to the downside, and obviously this would be a 54% move to the downside, so you want to shift that to based off log scale. But look at 97, 98K would be perfect, right? You're going to make that one more low here. You're going to get that bounce. And even if we do a 1, 2, 3, 4, 5, right? You get your 5-wave impulse, maybe up to the mid 70s, 3-wave corrective move, kind of bounce from the POC of this range. And then you get one more 1, 2, 3, 4, 5. But overall, that is an ABC correction, right? A, B, C, and you're rejecting from this liquidity, very important liquidity and very important golden pocket. In that case, I would take it all out at the golden pocket and look to flip short. But we don't have the data yet, and we'll get the clarity on the data as we're pushing up within these impulses and as we're making the bigger zigzag, because if we're developing high time frame bear divs, is as we're coming into this golden pocket, that's when you say, okay, hey, maybe this is going to make a lower high and roll over. So that's a complicated question. And if you stick around in the live streams, I'll be live streaming all this. Hopefully we will be able to catch all of this over the next year or so. But we'll have, once more data develops, that'll be more clear on what those actual TP targets are. But know that 96K, 96 to 98K, this high in here, very important liquidity. Also would be a golden pocket, so that would be a very key level. And then depending on how we react, I would leave some open to take out the all-time highs. 59 to 59,250K. Yeah, 59,200. I think around 59,200 is that wave 3 target. So 59,185 is the target for our wave 3 on the push to the downside, right? So if we're looking at this as a wave 1, wave 2, our wave 3 should bounce around 59.1, and then a wave 4, and then a wave 5. But that would just be the end of your wave 3. You would expect some sort of bounce from that 59K zone, but then you would want to see one more low come in afterwards. But you've got to remember, your wave 4 can come all the way up to the 50% retracement, right? So this could be a 1, 2, 3, and then your wave 4 literally comes up to the 50% retracement, which looks like it would be around the value area low. And then you get your 5. As long as the lows of wave 1 and the highs of wave 4 don't overlap, then you're good. And it doesn't look like they would, even if we came back to back test the value area low. Macro golden pocket to win. Wait, macro GP to win not on log. Yes, dread mining. Yep, I got you there. Yep. Maybe this is front running a troop invasion. Yeah, dark speed. That's a good point, man. There's a lot of whispers and rumors and talk about ground troops going, and if that happens, it's going to be scary for the world. Okay, I'm going to end this poll, guys. I'm going to end this poll. So 56% think we're going lower. 44% think we're going higher. Thank you guys for participating in the poll. Appreciate it so much. Let's see. I gotta catch up on this chat here. Yes, I get Dread Mining. I get what you're saying, and I know Jason's shown this a lot. Like the 786, the non-log 786 is our historical bounce targets on those bear market lows. So yeah, absolutely, man. Absolutely. Yep, stock market is dumping hard. NASDAQ, S&P, yep. Yes, he does. Zephyr, I know that Jason is always looking at those macro 786 non-log 786s for those bear market lows. Short oil while Trump's alive. Hopefully we don't get the short yet. Please don't yet. I want to take my profit first. Or did it already come up there? Not quite yet. Guys, I'm looking to come up a little bit higher on oil. At that 1.618, 101.85, I have a TP. And then I have another TP at 103.14. Exactly. I'll keep you updated. Stellium with 6 planets in Aries is no joke. And we unfortunately can see troops in Iran around this time. Yes, and Aries is war, the god of war. Very interesting, man. Yeah, please do, Golden Liquidations. Please do keep us updated on that. Make a screenshot. Are you talking about of those? I think I'm going to clip that video. Yeah, ground troops may cause a dump, guys. I would not be surprised. And by the way, it's not just the war that's having an effect. First of all, there's already been irreparable damage to our oil infrastructure around the world. And so anybody that thinks gas prices are going to be going down to like $3 anytime soon, they don't understand the way, how important oil is to the world. And like, if they start going after oil infrastructure and like Qatar's natural gas, natural gas could get so expensive, and oil, and guys, this could be a multi-year problem. And if the oil, I forget who it was, not Ray Dalio, but one of the guys was just saying, a really big investor guy was just saying that if the oil infrastructure gets ruined, we could see oil at 150 for years, like years, and the natural gas plants get destroyed. We could see a global recession from it, because oil is the biggest leading factor in the world on what happens to the macroeconomies. Like, our world runs off oil, whether we like it or not. So if this war really starts to take out some of those infrastructure of the oil and natural gas, we could be in serious, like, okay, let me zoom out on Bitcoin on the monthly time frame. And when I see this, Jason says this a lot in his channel too, but the markets can sometimes predict black swan events. And he says that, and you say, how can the charts predict a black swan, right? That sounds stupid. But actually it doesn't, because you see the technicals on the chart, because remember, trading is based off human psychology, and there's a collective consciousness of human psychology, and it's been proven to work for hundreds of years of trading and thousands of years of just human nature. And when I see this on the chart from 2017 to 2021 to 2025, higher highs on the price action, it also looks like a rising wedge, right? A rising wedge in here. And we see this kind of bear divs on the chart. Monthly bear divs on the chart. And actually, even going back to Bitcoin's 2013, you see bear divs coming in across the board, and money flow bear divs across the board here. And so if this bear div is finally going to start to play out, do you see a giant dump on Bitcoin? And if you do, where do you go to? The bottom of the wedge a lot of the time, or at least to the golden pocket of the wedge. So let's pull our golden pocket of the wedge, and let's see what happens on the monthly. Like, this is the worst case scenario, or even Bitcoin going to zero is the worst case scenario. But do we see $12,000 Bitcoin, $11,000 Bitcoin, guys? I mean, that is not as far-fetched. If we go into like a strong global recession that's worse than 2008, you absolutely could see risk on assets completely get destroyed. Completely. It's a nice support resistance flip. Like, I hate to say it, and let me just be clear. I don't think it's going to happen. I don't think we're going to 12K. I don't think we're going to get that big, crazy dump, but the technicals are showing that it is possible. And now when you look at this chart, like 32K doesn't even look that bad, right? 34K doesn't even look that bad. God, what if we dumped all the way to 11K? Yeah, I'm resistant to Jason's non-log analysis too, and I have pointed out to him a couple times about that log golden pocket, but you know, he's used it. It works for him. Jason's a great trader, a great trader. Like, so much respect for him as a trader, and so he knows about it though. He knows about it. He does use it some of the time. Okay, 30% of Qatar's oil production capacity has been taken out. Yes, it has, and it could get worse. That's the crazy thing. And yeah, it's hurting Asia really bad. It's honestly could be just the start. Europe is getting F too. We know that Europe is hurting really bad. Yeah, and here's the thing. We're pulling on the global oil reserves right now, but there is no reserves for natural gas, guys. They do not keep natural gas reserves. Another thing about natural gas is it's liquefied. They have to cool it down to like negative 250 degrees Fahrenheit to make it into liquid form in order to transport it. And when you blow up an oil refinery, an oil pipeline, all they have to do is replace a piece of the pipe, and then they can get that pipeline going again. When you blow up oil, natural gas, like infrastructure, it is a lot worse because you cannot transport that natural gas in gas form. You have to cool it down, super cool it in order to make it liquid, and then you have to keep it cool while transporting it in order to keep it liquid. So natural gas is a lot harder to rebuild than oil, and if they start messing with our natural gas, the production of natural gas and our supply and demand there, that is when we're effed, guys. We're effed. Like, you might be seeing natural gas 5-6 times higher prices even by next year. And natural gas is used for a lot of things as well. And I'm not trying to be doomsday guy. I'm just letting you guys know that this war could get a lot worse than people are thinking. Yeah, and exactly, Exhibit. Who will be mining if Bitcoin hits 12K? No one would. Bitcoin would collapse. It would destroy Bitcoin. Most of the oil from Iran goes to Asia. The less miners, the easier it is to mine. Okay. Chart shows support and resistance. If an external catalyst causes pressure on weakness, it'll dump. If a positive catalyst happen on strength, it'll pump. Yeah. I do think it's a little bit predictive because it's based off human psychology. Yeah, I know, right? A bait for, I get it, man. I get it. I don't think we'll ever see it, but you know what? Here's the thing, guys. We thought at 69K and 65K last cycle that we would never see below 30K, and it dumped to 15. So like when we say it will never go below 30K, could it dump to 12? That's half, 30. We thought it in the 30s, it dumped another $15,000 down to 15. If we think 30, could it dump another 20 down to 12? I mean, yeah, everything is possible. And I'm not saying that that's the most likely scenario. I'm not even saying that I would like for, like, I don't want that to happen. I don't even want to come to 32K. I don't want to come to 34K. I want to remain above 50K or at 50K for the bear market lows. No, Ryan, I know our natural gas doesn't come from the Middle East, but it would affect the global supply. And when global supply is affected, it will affect the world price as well. And it's just supply and demand because we're pretty much a global economy now, international economy. So, okay, let's see here. Yeah, natural gas heaters in your water heater. Yep. At 69K back in 2020, no one thought we would see exactly. Yarbuk, yep, exactly, man. Yeah, a real crash, like a 2008 type crash, guys, could literally destroy Bitcoin for good. Like, I hate to say it, but it could. 2026 is meant to be bad. Another thing, let me show you guys this. I've been warning about this for months now on the S&P 500, but particularly on the daily time frame. If you go watch the past month of my live streams, what have I been saying on the S&P 500? Let me just hide this for now, and we'll get rid of this. The big thing I said on the S&P 500, look at, you can see I still have my lines drawn here. We are seeing the biggest bear divs, the multiple drives, multiple drives of bear div on the daily time frame that I've ever seen. So from these highs at the start of the pitchfork band, when we started this selling exhaustion up here, right? Because you can see we were going straight up rapidly, and then we start to see some selling exhaustion up here. But look at these bear divs. 1, 2, 3, 4, 5, 6, multiple drives of bear div, money flow draining out of the asset, crossing into the red as we're forming this rounded top here. I've been saying for months now, guys, it looks like the S&P could dump all the way to the midline. At least. If it gets aggressive, where's it going to dump to? The lower band in confluence with the golden pocket. And what is now starting to happen? We are seeing the bear divs play out. Multiple drives of bear div. Go to the weekly time frame. You are seeing those bear divs. Money flows crossing down. We are seeing bear divs on the weekly. Like, this was expected. This was warned. I warned about this. Especially on the daily time frame. I mean, God, look how bad that looks. I have never seen that many high time frame drives of bear div on any asset. By the way, we were looking for a bounce at the 1.618. We were looking at two scenarios, an ABC correction with an expanded flat, or a 3, 4, 5 to come to the bottom of the pitchfork back there. And if you go watch the videos around this time in March of 2025, we talked about that. But could we come down on the S&P 500 all the way back down to 5,600? Absolutely, I think we could. At the very least, I think now we're going to be dropping to 6,250, 6,260. And seeing these bear divs that have been building and building and building finally starting to play out. And if it gets real bad, guys, if it gets real bad, you could lose this pitchfork, this bullish pitchfork here. If it gets real bad, come to the bottom of the pitchfork around 52 to 55, depending on time. But the big level, 4,500 monthly and another golden pocket. Like, could we come? And that's also kind of a nice general support resistance flip area. It could get very aggressive to the downside. Where was I at 69K back? Yeah, okay, I did that one. 2026, okay. 20. There are bedtime stories or something. These are bedtime stories. Yeah, CJ. Yeah, well, here's the thing about for. There's a lot of big names in Bitcoin, but like, imagine if Michael Saylor is forced to sell his Bitcoin, or he's going to have to file for bankruptcy, or he files for Chapter 11 and has to restructure, right? And sell some Bitcoin. He could be one of the major catalysts why Bitcoin dumps to 12K or to 30K. He could be it. Yeah. Yeah, and that's true. Everyone was getting into the metaverse, and it just completely got destroyed. This war is stupid, man. I think war in general is stupid. Honestly, like, I don't want to get into politics in here, but like, war, for the common people, for us, war is never a good thing, right? Generally, prices go up on things, hidden inflation, people getting killed. I mean, it's just dumb, right? And the elites use this as pawns. So that's I just don't like to see it. Now, I understand why sometimes war is necessary or semi-necessary, I guess, but it's just, yeah. Isn't this why Bitcoin was created? Yes, that is, Darksby, why Bitcoin was created. But just because it was created for that doesn't mean it will actually work. Because the market still sees Bitcoin as a risk-on asset. Yeah, change the political structure of Iran. That's true. We could, well, it's probably going to happen. It's happening, actually. So, okay, too much money in before. All right. Time Attack, welcome in, my friend. So good to see you in here. Much love to you, as always. Strategy sold off debt to buy their Bitcoin. Look at their actual business. I know. And here's the thing. They keep doing these what are they, zero interest like loans on Bitcoin. So they keep selling those and they keep taking the money from those to buy Bitcoin. They're leveraging. They're pretty much leveraging on Bitcoin, betting it all on Bitcoin. It's either going to be a really, really smart move or it's going to get them destroyed. But I'm pretty sure now, actually, Jason was just talking about this in his live stream the other day. I'm pretty sure now Bitcoin, or Michael Saylor's average price on Bitcoin is at $76,000. So he's already underwater on Bitcoin. Let's go to this channel, and we are coming up to the top of the channel. I would like to see if we can break out of this thing. Let's pull our volume profile because we could see a fake out to hit that value area low and then dump. How does our order flow look? Man, you guys, it does. Longs continue to come in here. I am really concerned that we're going to see that bearish absorption play out. I am really concerned. Yeah, flushing Wall Street out would be nice, actually, though, huh? And he does have infinite money borrowing. It's a crazy, crazy scheme. Yeah, I think Time Attack, I am looking for a bounce. I'm not seeing the confirmations I want, but guys, at 69K, 68.9, 69K, I'm really looking for a potential short. You know, because we had our impulse that started this to the downside from 76 to 67.3. 1, 2, 3, 4, 5, right? You have your 5-wave impulse. You got your 3-wave corrective move, WXY correction. Now we're in the 3rd wave. We're in the 3rd wave to come down to 59.1 or lower. But within the 3rd wave, you're looking for bounces, right? Wave 1, wave 2, wave 3, 4, and then that 5. So could we get a bounce from here up to 69K? Sure. It would be really nice to see. And I'm hoping for it. Honestly, I'm hoping for it. Today's daily candle close is going to be super important, guys. If we close below the value area low of this range, then it is more likely that we continue the dump right away. If we can close at or above the value area low, we could range for the weekend and see a move up to 69K, maybe that lasts all of next week before seeing the big dump come in, right? What would invalidate the bearish CVD absorption? If you start, because with bearish CVD absorption, you're making lower lows in the price action and you're making higher highs in the CVD. So what would invalidate it would be taking out this high at 66.8. If you came up and you took out that high, it would invalidate the bearish CVD absorption. But you really don't want to look at these lower highs. You want to look at the high where it starts. So on Coinbase, it was 66,812. On Bybit, it's like 66,786. Markets are closed now. Yes, markets are closed now, so that at least some of the volume will die off here. I hope we get the bounce to the 69K short. I do.
Crypto Wander One, much love to you, man. Have a good weekend. Thank you so much for joining, and hope to see you back next week. Yes. So it's Cheeks. That's what we want to see for that. Now, we do have our VWAP there. So we do have to watch, because in a trending day, the VWAP will reject you. So if we come up here and we take out that high, you probably are still going to get a pullback because it's liquidity into VWAP. But at least then we could look for a higher low with more confidence, because it would invalidate the bearish absorption, right? So then we could look for a higher low into like a golden pocket. And then wherever that golden pocket is, you could long that, because that could bring you up to 69K. Yeah, guys, I do have to get going in about 10 minutes. Is there anything else you guys want me to look at real quick here? Briefly here, we can just keep an eye on Bitcoin, of course, right now, because Bitcoin is coming up to those channel highs, and I do want to be paying attention to this. Let's see if we can get this. Now, guys, trade safe over the weekend, please, because obviously the geopolitics is getting really heated right now, and we have seen the last few weekends these actions that occur within this war are happening over the weekend, and because it affects the markets less because they're closed, the TradFi markets. So be aware that volatility usually on the weekends is very low. But with what's going on around the world, it could get very high. Oil. Let's go to oil real quickly here. U.S. oil. So do I think oil will go to 120? I think it could, absolutely. What I'm looking for now, I'm looking at more low time frame stuff right now. So the 1.618 is at 101.85. And now oil's closed, but let's go to CL. USDT. By the way, guys, you can trade this on Blowfin. You can trade oil on Blowfin, CL USDT, and I do have Blowfin in there if you want. Real quickly as well, guys, if you do want to join the Telegram, remember, all you have to do is sign up with BYDFI using my affiliate link and deposit the minimum deposit of $100 or more. Once you do that, you can click the Telegram link in the description of the video, and you type in /verify in your BYDFI user ID, and that'll get you into the Telegram. Last weekend in the Telegram on a Saturday in the middle of the day, I was just popped in for a second to look at the charts. I saw a short on SUI, a scalp short that was an 8.8 risk to reward ratio. I let you guys know about it. I let you guys know I just entered it, and it ended up playing out, and we made 8% in like 2 hours. So if I do see some nice opportunities over the weekend, I will post them in the Telegram, but obviously I'm not going to be hopping on YouTube to make a video about it. So just if you want to get more information over the weekends, try to join that Telegram if you can. You know, that Telegram's free. You're not paying me the money. The money you deposit into BYDFI is your own money to trade with. But let's go to CL USDT, and I think we might see, I mean, I think those highs are going to get taken out, but could oil go to 120 again? Yeah, I do think it could go to 120 again. Does this CL USDT close too, I guess? The thing with oil is this move down right here looks like a corrective move, right? It looks like a 3-wave move here. So because that was a 3-wave move down, it's, you know, we could be looking at it merging into a bigger 3-wave move by a 3-wave move here, a bigger kind of WXY complex correction that kind of creates a sideways range, which is likely, you know, in war. It's based off the news a lot too. But yes, we absolutely, because this first move down was a 3-wave move, you could absolutely come take out this high because of that. It's just, are we going to see a bigger fluctuation in a range before taking out that high? I'll tell you what, I think that Iran is not backing down. I think that Trump is hard-headed. I think there is going to be some escalation that occurs,
And I think that oil could go up pretty aggressively. So let's just say I am going to stay in that long. You know, I have one TP at these highs. I have another TP at 103.14, which is the golden pocket that we front ran. And let's make that not based off log scale because it's not enough. But I guess on CL USDT, you hit it. On the US oil charts, you didn't, and it's a little bit higher on the US oil chart. So on US oil, you can see we didn't quite hit that golden pocket. 103.14 to 104.51. But also, let's just look at this from the lows. 1, 2, 3. We're almost to the 3 right now. So even if we get a pullback, maybe the 3 comes up to the golden pocket, pulls back, you get a 4, and then you should get one more 5. So I would be looking for another high. If we take out 101, I would be looking for another high after retracement. Can we get BYDFI from the UK? Yes, you can. Yes, you should be able to get BYDFI from the UK. Can we look at Hype for fun? Yes, I was actually looking at Hype. I was long on Hype, a very small one. I longed Hype at the bottom of this channel. I was looking around 36.6 because this looks like a 3-wave corrective move here. Now, unfortunately, this looks like a 3-wave corrective move as well. So now are we going to see another 3-wave corrective move? But I took profit at this golden pocket. I completely took profit at the golden pocket, and it's also a bigger golden pocket, right? So, and then what I'm looking at is because we front ran that 0.5, we still could come down to the 0.5 Fibonacci. Oops. We could still come down to that 0.5 Fibonacci and see, like, instead of seeing this as this being the corrective move, we're going to see a longer extended corrective move before continuing up. But overall, I'm looking at continuing up on this thing because based off of the Elliot structure from $25, 1, 2, 1, 2. And the reason why is because you have overlap between this high and this low. So you have to classify it as a double 1, 2 impulse. So you have your 1, 2, 1, 2. You have your big 3. This is a 4, or this whole thing is going to be a 4, right? Coming down between the 0.382 and the 0.5. Then I'm looking for one more 5, and then one more 4, and then one more 5. So I'm looking to come up on Hyperliquid up to this box up here. We have a naked weekly point of control. We have a weekly level up there. And I believe it was, there's a couple other confluences up there as well that we have in this box around 47. Value area high of this upper range. See this upper range up here? Value area high of that upper range. So yeah, that's, I'm looking for that last double 1, 2 impulse. Even if this is an ABC, right? A, B, C to come up, make a lower high before dumping. You're still looking for this impulse to finish. This last C wave impulse to finish. And because we started it with a 1, 2, 1, 2, we got our 3. Now we're looking for 4, 5, 4, 5. So I am looking for Hyperliquid to come higher, but first we might come down to 36.6. And at 36.6 now, we have pretty much semi-equal dual lows, right? We have the liquidity from here and we have the liquidity from here. So I would be looking at grabbing some liquidity and then seeing a move up to break the highs. 2, 4, 5s come in. Okay, let's just check Bitcoin very quickly here. Guys, I hope you all have a good weekend. Remember, we are in a wave, a potential wave 3 to the downside. So I'll tell you what I'm looking for to get into the long here.
I want to break market structure of this 66,238 right here at 66,238. I want to break that. It would also be breaking out of this channel. If we break that, then we could look for a pullback to around the golden pocket. And that's when we could look for a long, right? And I'll be looking for overall coming up potentially to $69,000 where I'll look for shorts. Until I'm being more cautious because we are seeing bearish absorption. Lower lows, higher highs, nice increasing open interest here. So I'm very cautious about taking a long right now with us seeing bearish absorption here. But there is still a possibility this plays out. This is real support. This is our like best support. Really within this range, it was our best support level. So let's see if we get it. Yeah, I'll look at Tau very, very quickly here, just like 2 minutes. But I do got to get going soon. Okay, let's see here. Oh, yeah. Someone was asking me about this in the chat the other day in the Telegram. So this, first of all, this does look corrective in here. But now I don't like the way. Yeah, I mean, it's a lot of overlap in here. A lot of choppy overlap. What I would be looking at is we could pull our channel here. You kind of have this descending channel that you're chopping in. Where was that? Yeah, and to me, it does look like it's part of an impulse. So you kind of have, you know, this isn't the best here. 1, 2, 3, 4, 5. Your 2 went really deep, but it's not an invalidation. Then you kind of have this flat in here for a 2. You know, this all could be a 3 and then a 4, and then you're in your 5. You're in your 5th and final wave. So 1, 2, 3, 4, and then coming up to the midline. We were at the midline though. We have hit the midline already. And that midline was a major short. And remember, we were looking to take out all of these liquidity. Remember, I was talking about the golden pocket into all of these lower highs, high, 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 all of these guys here. So we finally took that, and you are at your big resistance, being that pitchfork midline. So be careful that you're at the pitchfork midline and you're rejecting, but so far the rejection looks corrective. So if we can get one more high, even if it's just an SFP of those highs, that would be a nice tap, double tap of the pitchfork midline to make a short, to get a short opportunity. But you might see within this last push up here, you could either say this was a flat, a running flat in here for a wave 4, and then we're still in our wave 5. Or you could say that this is a 1, 2, 3, 4, but you should still get one more. Now, just in case you are rejecting from your pitchfork midline, and if you do come up to your golden pocket area, you might see an opportunity for a short. You'd have to, I would want to be seeing bear divs and a 3-wave move if we're coming up there to 355 for the short. But honestly, this channel looks corrective to me, and it does look like we might continue popping up here on Tau. But look at, you're at your pitchfork midline, a very, very important pitchfork midline here. Yeah, and it does look a bit 1, 2, actually all of this could still be the 3. In that case, if you're looking at this, you know, as a 1, 2, 3, you want to get that pullback, and that pullback might bring you to the 382 to the 0.5. And let me just check. All right, 131%. Let's make that based off log scale. Oh, that anchored VWAP at 274 along with that 382 looks pretty good, because there's also going to be probably a point of control in here. Yeah, a little bit higher, but let's see if we have a weekly in there. Naked weekly. Nope. I just, be cautious. It doesn't look like the impulse is done yet. But let's do this. Let's pull this. Yeah, you've already surpassed your 1.618. So it's more likely that this is an impulsive structure because 1, 2, you passed the 1.618. 3, could we get a pullback? 4 and then 5? Sure. So then you would be looking, at worst case scenario, 274 to 248. But even within the 3, yeah, you might need one more high in there. So, okay, guys, thank you so much for everything. Have a good weekend. Trade safe. I will post in the Telegram if something important is happening or if I'm taking any trades. I'll let you guys know. Other than that, I'll see you next week. Tuesdays, Thursdays, Fridays, live stream at 3 p.m. Eastern Standard Time. And Monday and Wednesday, we'll do the video. I'll keep you guys updated in the Telegram. So please join the Telegram if you're interested. Have a good weekend, everyone.